All right, what's going on, guys? We're going to be going over a trade recap and really getting a nice glimpse for how this trade was executed properly for the long side trade. Um, this is all basically revolving around the August 5th low, and that's just one thing that I want to talk about very, very, very clearly. And I want to make this a priority for you guys to understand here and hold a lot of emphasis to these levels that have not been retested. They're being retested, and you guys always got to remember the high volume candles and the gaps left behind are where the liquidity rests. It's where the liquidity rests at in the market, right? And we want to know where the liquidity is for big banks to be able to build positions, for the change of hands to continuously occur, right? And that's only going to occur at price pulling down into levels that make sense where things need to be undercut. They need to fill gaps. We had the August 5th lows on the S&P here at 510.27. We go over to the NASDAQ and we have the August 5th lows at 423.45. And then the common characteristic between both of those things was gaps beneath us, large retests of the 2021 highs, all leading into Vanna Charm returning on April 7th, right? And then we had another big time gap to be filled beneath the August 5th lows on the S&P at 505, right? So all of this stuff got hit, and then we had a news mishap. Is that the right word, or is my English really dumb? Mishap? Is that proper language there, guys? I don't really know, but I drank a fuckload of beers yesterday, so I might be speaking in a not so smart way. But we go to the smaller time frames now, and we can see how this very, very large counter trend reversal happened on an intraday perspective here, with the biggest volume is really, really, really big in regards to the relative to the rest of the range here on the daily volume profile on the S&P, as well as the Nasdaq. As you guys can see, this day right here, April 7th, which is also the day Vanna Charm is returning, and this is also a day where we did undercut the August 5th lows to obviously capture that liquidity, be able for a more of an imbalance happening from the lower end of this sell, this 15% capitulation. And this is extending away and tripling or doubling its daily ATR 3 days in a row, guys. How often do you really see minus 5% days happening back to back? And then a third gap down of 6.5%, almost 7, closer to 7. And it actually did almost trigger a circuit breaker on this day, I believe. So it was plunge protection bid coming in. It was fake news at the bottom with some of the largest hourly volume we have ever seen. This, how much volume was traded here on this day, or on this hour? 9.7 million volume traded in the NASDAQ. We go over to every other hourly candle. I mean, the last time we had hourly volume looking like that, guys, was the August 5th bottom. So you guys have to be aware and get a feel for the volume, get a feel for volume that makes change. This is why I kept roasting bears and I kept saying, everyone thinks the world is ending and whatnot. You're not following technicals. You're not following anything in regards to how markets move when you're trying to get a little bit extra juice on your short, and you're shorting the whole from very, very, very overextended territory. And this was really a blessing in disguise on Tuesday. And I commentated this perfectly. If you guys want to go back and take a look at my Twitter and what I said about comparison as to like the August 5th thing happening, was a very, very large candle from the bottoms, a very, very large volume, some of the biggest hourly volume ever traded. This was off of also a gap fill, right? Okay. So very, very, very important area as to where like a sell climax could start or an absorption footprint candle. And that was exactly like the August 5th day that we had over here, just heavier volume than August 5th. And then what happened was we had the three breakaway gaps to the downside happening back to back to back with a really clean intraday reversal on August 5th. and then everyone goes short on another lower high possibility at the top of the gap fill, right? And that's exactly what happened on this day. Shorts got squeezed on the subsequent day, leading into like a CPI or GDP. I can't remember exactly what this was, but it was a data set leading into the Thursday. A lot of short exposure entering into the markets and repurchasing of those hedges, and then a hedge pot rarely boils, meaning that whenever everyone is buying into hedges and creating an influx in positioning in terms of call to put skew towards lows under very high volatility by strike, then Vega decay is going to happen. It flips dealers long, and then there's going to be a mass amount of squeeze potential behind the positioning turning bearish, quote unquote, from Goldman Sachs. The call to the puts increasing, positioning increasing. Everyone's getting short on a lower high possibility on like the top of the gap retest on this day right here, April 8th. And then the subsequent day squeezes everybody out. You guys got to remember, yes, this was a very bloody intraday reversal happening, and it put a lot of fear in people's minds. But we're still trading from the lows of the April 7th day. We're still trading a lower high on top of that April 7th day, right? And all of the volumes at the lows, not from the sell. So it's a simple imbalance on the buy side in terms of volume, okay? And then this gap up was sold off, reaccumulated, followed by news. Now we're digesting the news leg properly with swing low, swing high, intraday discount opportunity from 438 to 432. Quite the large range, but you want to get as close as you can to that golden pocket territory. And we bounced directly off the golden pocket, right? So, yeah. Really nice opportunity for trade execution here. If you want to pull fibs from just the candle itself, the April 9th candle, that could also work as well. 435-ish, 436-ish was kind of where everything got undercut. All of this progression got undercut. It faked everyone out, and then it had a really nice daily candle closure back above, right? So you had another opportunity to get long anywhere on these dips, okay? So I reloaded my Junes down here, took the Junes back up towards this gap, sold some off into the close of the week, still own some. Could get a decent little gap up, but that was just a really nice depiction of very clear risk to reward of like a daily candle closure beneath 438 invalidates everything. And nothing ever got invalidated. We based above 440. We put in a low a day on the Friday session above the equilibrium as well as above these previous resistances here on the daily chart, where shorts got squeezed from the highs of those daily candles, right? So this is now acting as a support. Now I'm basically just looking at everything kind of pulling up into the gap, maybe a little bit above the April 9th highs, leading into the window that ends April 17th, and then that's whenever supportive flows come off the table. The Vanna squeeze will be over, and then we'll obviously look to reshort things. So, yeah, that's everything that I was trading. As far as the April 7th bottom, this was, like I said, very massive extensions away with 3 back-to-back capitulations that were all extending by double over QQQ's ATR. That's going to call for a very nice, easy rubber band snapback long. So I started buying leveraged ETFs. I told you guys right into pre-market open. Started to buy some NASDAQ, started to buy TQQQ, bought TSLL, TSSL, TSLLs, TSLL's execution point was off of this gap. It's going to look a little bit different than the Tesla chart because this is a leveraged ETF. So I had risk basically off of this weekly low, 711, after we started to reclaim that. You had opportunities to then think about taking a reclaim with a risk of like literally off of that level, probably down into, you have a 10% risk with an upside reward of 40%. 4-to-1 risk to reward trade, NVDL. Gap 2450 risk into April 7th open. We go take a look at the pre-market. Very clear, easy opportunity to take ads sub 2450 and then managing that trade around what happens on the daily candle close. Like I said, buying into the pre-market session with a risk beneath would be at worst 11-10%. With an upside reward, like I said, you guys go over to the NVIDIA chart and you take a look at where NVIDIA obviously has room towards, and this has room towards all the way up towards like 110. So around the April 9th candle highs, and from the lows, I mean, you're looking at a 20% return just in the 25% return just in NVIDIA Commons on this trade, and then NVDL, we're looking at this being target around 38 with ads around 24.50, 23.50, about $1 range of ads, and like probably about $1.50 of risk with an upside reward of 65%. So that's a 6R trade actually, 6.5R almost on that Commons trade. This is why I said you do not need options for these environments of absurd volatility. And the positive flows, the Vanna squeeze potential behind everything, all of these still have room to the upside of probably 20% or more. So you're looking at potentially an 8R trade from April 7th into April 17th. That's why I was all over, that's why I was staying up and I was all over the pre-market open opportunity. Does that all make sense, guys? Did Rory McIlroy win it?
Không gọi à.
Yeah, now we're looking at a vol reset, everything being reset into a vol crush happening into this week. I'm also looking at some calendar spreads. Alrighty, boys. Well, if there's no questions, then I'm going to stop this recording, upload this. That's basically all my trading execution was. If we guys go over to TQQQ, you can see how you had a risk associated. You had a potential to reload, and you could have been buying this, selling it off in the gap, looking for the gap rejection, everyone going short, reloading the gap rejection, and then the squeeze through, similar to the August 5th that happened right over here. And you got returns whenever things are capitulating 3 days on end, doubling the ATR of like ADR of the Nasdaq. You're looking at upside reward here, like within TQQ, like 35%, right, or 50% from lows that happened here August 5th. Very similar scenario happening over here, right? Like TQQ can technically reach all the way up into here for a 38%. Wait, am I looking at the right thing? What's going on here? No. 63% of upside reward on TQQQ. And no, not a lot of risk associated whenever you're getting averages off of these candles, right? 55% at the worst, or maybe even 46% at the worst. 10% risk. So you could be repurchasing this technically with a risk of a daily candle closure beneath of, 10% risk, upside reward of 30%. Still a 3R opportunity. I think we could reach up here. So technically within like the S&P, that would be all the way up into 565. And the largest aggregate dark pool seller is actually sitting up towards 560. So yeah.